Hi, I'm Bob Mangold with the Savings Network, here to take and help you cut your expenses while improving your lifestyle. And we're here again today with Denise Maxwell, CPA extraordinaire.
Hi, Bob.
How you doing today?
Good to be back.
Good. Okay, here's the big question I get from everybody.
Okay.
How can we legally reduce our taxes? And I want to emphasize, folks, the key word is legally reduce our taxes, right?
That's right. We don't want to end up in the big house.
No, we don't like messing with the IRS, right?
No.
But there are some things that we can do that can help legally reduce our taxes, and right, well, there's nothing in the Constitution that says we have to overpay taxes, right?
No, we just want to pay our fair share.
Okay, so let's talk about a couple of those ways. The first one is having a small business. Can anybody have a small business?
As long as they know how to run it. Yeah, there's no legal requirement saying you can't and I can.
Right. So we're not endorsing any specific type of business. I could go out and be the Mary Kay lady today, right?
I'm going to guess Mary Kay man would be better, but
probably
yes, you
would
could.
be. Right.
Yes, you could.
But I have clients who is an art teacher that started to sell their art online. I have computer people that started building websites. So there's a lot of different things you can do with owning a business. So what are the tax breaks that people get? The first big one is the home office, right?
Yes, the home office is actually huge, but it scares people.
It does, doesn't it?
They forget that the IRS changed the rule book back in 1999. And you know, the IRS itself estimated 20 million people would be eligible for home office deduction with the changes they made.
Unbelievable.
Unbelievable.
So we're just giving our money to the government that we don't have to do.
That's right.
They could get mileage on their car, right?
That's right. If it's business miles, all written off.
Right. Dining and travel.
Potentially, yes. You could even potentially dine in your own home, make it a business write-off. And we'll talk about that in another segment.
Absolutely. Another one, especially if you're from Arizona, we have some Arizona tax credits that Denise is going to touch on, but we're going to do a separate video just for Arizona residents. But they're awesome, aren't they?
Oh, they are unbelievably good. If you don't know about these, you've got to tune into that segment.
And then the last one is charitable deductions. This is another area that people get afraid to write things off. So there's some guidelines they want to follow, right?
Well, it's funny. People get afraid or they get overzealous on the charity. What happens is the IRS a couple of years ago changed the rule, and even cash donations now, they need a receipt. But also keep in mind, do you actually need the receipt? I have clients sometimes say, well, just put down what I had last year. Well, that tells me they probably didn't really go to Goodwill this year.
Well, that's an issue, isn't it?
So you want to make sure you go to Goodwill. Another thing is a lot of people are kind of purging right now, getting rid of things, maybe got bumped out of their home. Instead of having the garage sale, you might find it more beneficial, and check with your tax advisor, but it might be better to donate all that to Goodwill, get the receipt, than maybe the nickel and dimes you can get off the street corner.
Absolutely.
And besides, football might be on. You might have a better way to spend your Sunday.
Probably. So here's what's important, folks, is you don't need to overpay your taxes, but we want to make sure that you save your money and do it legally. That's the key. But there's no need to overpay. So for today's episode, our message is don't overpay your taxes. Talk with your CPA or tax advisor and get your things done properly. Have a good day. We'll talk to you soon.